Hello and welcome to Young Turks Rewind 2013, our special year-ender. I'm Shireen Bhan. Today we reflect on the year gone by. The first 3 quarters of 2013 saw over 190 deals being struck and over $380 million being committed in investments. E-commerce and healthcare, those emerged as the most favored sectors. In fact, the e-commerce space saw global giants like eBay pumping in some serious money, resulting in some awe-inspiring valuations. 6 e-commerce companies managed to make it to the list of the top 15 that raised the highest venture capital in the first 6 months of 2013. Interestingly, healthcare and life sciences together accounted for $32 million of the nearly $200 million raised by the top 15 companies in this universe. The year also saw some big-ticket exits, with Redbus being acquired by South African media giant Naspers for a reported $150 million. It was also a big year for social entrepreneurs, impact investors and Indian innovation. To discuss the year gone by and the year ahead, joining me in the studio, Kunal Bahel, co-founder of Snapdeal.com, Anshu Gupta, founder and director of Goonj, and Vikram Vora, founder and CEO of My Dentist. Gentlemen, thanks very much for joining us on this Young Turk special as we talk about the year gone by and the year ahead. Kunal Bahel, let me start by asking you, because you've pretty much captured the headlines in the startup space for this year. The latest being the online payment gateway. You've, of course, seen a significant amount of cash coming in. So 2013 has been a good year for you, despite all the gloom and doom in the general economy.
I think the startup space generally doesn't seem to be very correlated with the doom and gloom in the economy.
Yeah.
And I think the reason for that is that most of the startups that have become large in a short period of time are solving a real need. And because they're solving a real need, they're actually on a parallel path versus the economy's trajectory in terms of attracting capital and as well as getting overall user traction.
So in terms of money, and one would have thought that investments would have dried up, but that certainly doesn't seem to have been the case as far as 2013 is concerned. And the question is, in 2011 and 12, people were talking about valuations having peaked out. And come 2013, I mean, you've got awe-inspiring, shock and awe-driven valuations. And they're saying, now, this is not the peak yet. So where do you actually see valuations going from here?
I think valuations they're a number that people are willing to pay. The real value for business is the value that I would say a broader market at an IPO or a strategic is willing to pay, right? The value that financial investors are willing to pay is not necessarily the real value of the business, but it is definitely a barometer for the optimism that exists in the market.
And there's plenty of optimism if you go by what people are paying at this point in time,
yes,
even into businesses like yours. One would have thought that as far as the e-commerce story is concerned or the m-commerce story is concerned, it had a lot of this smoke and mirrors kind of stuff because, you didn't actually have visibility in terms of profitability. And even today, there isn't clear visibility in terms of profitability. Is it looking different for somebody like you, Vikram?
So in the healthcare space, we're looking at large capital investments. So
and again, money coming in 2013, besides e-commerce, healthcare has actually attracted a significant amount of money. Yeah.
So you could see eye care growing large. You can see dental care, in which investment interest has been there. You have diagnostic chains which have grown substantially over there.
Is the trend going to be more of these niche sort of services? Do you see more segmented sort of service offerings now?
It's easier for an investor to invest because in that case he's looking at a specific domain. That's where life becomes easy for the person to comprehend.
Is it getting harder as you grow and expand? Is it getting harder for you to actually be able to do business in India?
Not quite.
No?
Not quite. Healthcare is driven by numbers.
Yeah.
And
but just the ability to set up, find place, talent, all of that, and be able to keep the costs low.
Getting dentists on board has not been a difficult situation.
So what has been your number one challenge?
Number one challenge is streamlining our operations.
Okay.
And making them more scalable across geographies. But we've been able to negotiate that very well now.
Anshu, it's been a bad year as far as what you do is concerned. We've had Uttarakhand, we've had Orissa, but in a sense, it's also been a turning point for somebody like you and for an organization like Goonj, because for the first time, I think in your career and in the evolution of Goonj, the kind of mainstreaming of attention that perhaps somebody like you or Goonj requires, you got this time around because of Uttarakhand.
No, I think we got it, but the fact also remains that before this in 2005 or 4 when the say tsunami happened, and then 2008 Bihar floods. Normally Bihar floods are, it never gets media attention and all, but 2008 was given a lot of attention. So that was also a turning point. This particular year is really big, you know, to be honest, in terms of Goonj,
because I know you were having trouble just managing
them. Because, you know, imagine say almost 100 trucks load of material, some 40,000 individuals contributing monetary or whatever. So that was really huge. And also the terrain was pretty difficult that way. So it will take its own sweet time to operate there. But the kind of trust we got from people, I mean, that is something which is the thing for this particular year for us.
What is the big challenge for you today, and what is the challenge that Goonj faces today as you try and scale up even further?
I think, you know, a lot of people have started copying or replicating the idea, but the only challenge out here is that people do not want to replicate the entire idea. So if you see Delhi today, everybody is collecting something, but they are not understanding that we are not in the business of collecting clothes or distributing clothes. We have rather turned it around into a resource where it becomes a currency for development.
Right.
Okay. So that is the biggest challenge, that people are understanding, people are copying it, people are replicating it, but not the ethos of it. That is one of the biggest challenges, because once you grow, and especially with a disaster, the kind of growth happened, then obviously all those people remain with you. Even in normal life, they remain with you.
Sure.
Because they understand that there is a reliable channel to give away the material or whatever.
Yeah.
So it keeps coming to you.
Do you really believe that we are at that tipping point when we are going to see big ticket exits? And when I mean big ticket exits, we're going to actually see global giants come in and pick up Indian companies like perhaps yours.
We are seeing that, right? If you think about eBay made an investment in our company, it's atypical for large multinational $75 billion companies, market cap companies, to come make financial investments in emerging market businesses, right? So there are multiple layers of the onion that need to be peeled for them to get comfortable to do that. And the reason they are getting comfortable is because they are also very confident the size of the market is increasing very fast. So e-commerce will go from $1.5 billion to about $40–50 billion market in the next 10 years. But I think
has the growth surprised people? Because, you know, I come back to a conversation that we were having about, yes, digital will pick up, but it's still 10 years down the line. That's clearly not the case. I mean, it's here, it's arrived, and it's booming. So is the growth, in a sense, unanticipated as well?
So I think the growth is unanticipated, but understandable. In our business, we've seen the number of orders we receive over the mobile phones, just small screen, not tablets, grow 16 times in the last 12 months. And that's going to be a huge driver. Eventually, no one's going to talk about e-commerce. People are only going to talk about who's the largest m-commerce company. And even on the seller side, right? So we are sort of largest marketplace, and we have all these sellers, and they are getting really motivated to sell online because they know that digital is the only way for them to get nationwide reach.
So how do you need to then reposition yourself? Because if you're saying you're going to be the largest m-commerce company as opposed to an e-commerce company, what does it actually mean in terms of organizational transformation?
So 1 year ago, we started seeing that 60% of all the people who bought over the mobile had never transacted on our platform before, which showed us that the big tsunami of e-commerce buyers or digital commerce buyers broadly are coming over the mobile. So we told our engineering team that we need to break our PC business, because unless we revolutionize our own business, we won't be able to revolutionize the market. So we started spending a lot of energy on our product management, on our engineering for the mobile, our mobile apps, and they have yielded phenomenal results.
So what's been the big lesson as far as you're concerned? As I said, 2013 has been a big year for you. What's been the big lesson that you've actually learned along the way?
That if our ecosystem doesn't make money, we will not make money. And our ecosystem...
And what are the odds of the ecosystem not making money? Are they stacked against the ecosystem or in favor of the ecosystem making money?
I think it's up to us how we stack up the odds. Because if we align our objectives to our ecosystem, essentially our sellers, to make money, eventually we will also make a lot of money. So for instance, we consciously do not charge sellers to list their products. We only charge them when they sell something. Just simple things like those which align objectives is very important.
Is it patient capital, or they're saying show me the money now?
The show me the money now part is there somewhere, but it's definitely not at the top of the top of the table.
The purpose of business is to make money, not
Sure,
to just
sure,
deliver top line.
absolutely. I mean, you can't just be focused on the top line. But 2014,
I think 2014, 2015, you will see us be profitable.
Anshu, 15 years for you in 2014. What can we expect for you and for Goons?
We were very clear right from the beginning that we don't want to grow just as an organization, we have to grow as an idea.